Hi guys, welcome back to my channel. Kelvin here. Singapore Savings Bond or SSB is getting super hot recently. How hot? Last month, there were $700 million worth of SSB being offered, but there were $2.4 billion being applied, which is way too high. In the end, most people could only get $9,000 worth of SSB. Why like that? That's because the SSB yield is going up and up recently. And right now, it's already at 2.8% yield. What lah? So, in this video, I will explain what is SSB, should you apply for it, some useful SSB tips, and a simple step-by-step guide on how to invest in SSB. But before I start, I would greatly appreciate it if you can help to tap the like button and subscribe if you haven't done so. In return, I will show you a happy dog. Alright, let's start right now. Okay, just in case you don't know what is SSB, let me quickly go through some facts about SSB. Every month, MAS will come up with a new version of SSB. Each SSB lasts for 10 years and every year the interest will be different. For this issue, the interest starts at 2.63%, then goes all the way up to 3.04% at the 10-year. That's how you get the 2.8% average yield. SSB interests are paid out every 6 months. So let's say if you applied for this month's SSB, you'll be receiving interest in March and September for 10 years. Now, even though this SSB lasts for 10 years, you don't have to wait for the entire 10 years to get back your money. All you need to do is just apply for a redemption anytime from first business day of the month till fourth last business day of the month. Pay a $2 transaction fee, then you get back all your money plus accrued interest by the second day of the following month. This month's yield is at 2.8%, which is slightly lower than last month's yield, which was at 3%. And if you check out this chart by investment mode, you will see something interesting. What you will notice is that the 10-year yield, the blue line here, is going down, while the red dotted line, the 1-year yield, is going up. Why is it like that? Vox has done a fantastic video which explains this. Basically, if investors think that the economy will be bad in the short term, there's less demand for short-term bonds. And because there's less demand for short-term bonds, short-term bond prices will go down, which causes short-term bond yields to go up. Instead, investors will prefer to park their money in longer-term bonds. Their prices would go up, which causes their yield to go down. That's why you see the 1-year yield going up and up, but the 10-year yield is starting to come down. And amazingly, if you check US bonds, this pattern just happened 2 months ago, where the 2-year bond yield shot up and went past the 10-year bond yield. So now, there's a yield curve inversion going on. There are predictions that the Singapore economy will slow down, and because of that, we might see yield curve inversion happening to Singapore bonds. Check out this chart by Endowers. The blue line is the amount issued and the black line is the applications. You can see that in the past, there have been oversubscriptions before. That was when the market suddenly crashed in 2018. Many people were worried at that time, so they bought bonds to hedge their positions. But now, with predictions that a recession could happen soon, more and more people be like, buy bonds ah! And so, you will see applications going up. That's why the maximum amount that each person can get is going down and down. Initially, it was at 200k per person. Now, it's just 9k. If this continues, we can expect each person to get less than 9k for this month and the next few months' bonds. Quick pause. Webull is the latest stockbroker in Singapore. With Webull, you can now buy US stocks, US options, and Hong Kong stocks for a low fee of $0. Yes, that's right. It's zero commission trading. Webull also supports fractional shares, so you can now buy stocks with just your $100 Angbao money. But the most important question is, what's their sign-up gift? If you sign up now, deposit at least $1,965, make 6 buy trades on either US stocks, ETFs, or options, you will get $100 worth of free Google shares. This promotion ends on 1st September, yeah? So if you are interested, you can sign up with my link down below. With that being said, let's get back to the video. Here's a fun fact. You can actually predict what will be the next month's Singapore savings bond yield. That's because SSB yields are calculated based on Singapore government securities bond yields. The calculation is super complicated and I'm too noob to understand these equations. So I'll teach you a much simpler way to calculate. Just go to SGS prices and yields, benchmark issues, change the date to the previous month. For example, I want to estimate 2022 August yield. So I'll change it to 2022 July for start and end dates. Change the frequency to daily. Then take 1-year T-bill yield, 2-year bond yield, 5-year bond yield, 10-year bond yield. Scroll up, then click download. You will get this Excel file. This is the 1-year, 2-year, 5-year, and 10-year bond yields. Under the first column, type equal average, then highlight the numbers in the same column to get the average. Do the same for the other columns to find the average. This is the current month's SSB. For the first year, both are at 2.63%. The calculation for the second year is 2.69%, while SSB second year is a bit different. This is caused by some rounding differences. So you will sometimes see a difference of up to 0.03% plus minus. For the fifth year, both are at 2.69%, and the 10th year is at 2.8%. So that's how you estimate next month's SSB. If you want a simpler way, I also found a SSB estimator by Financial Literacy Singapore. In his spreadsheet, you just need to copy-paste the previous month SGS use and it will auto-calculate all the SSB use for you. The result is also quite accurate with a difference of up to 0.03% plus minus. I will leave all the links in the description below for you to check out. So that's how to estimate next month's SSB yield. What you can do is wait till the last day of application, which is the 4th last business day of the month, or in this case, 26 August. Then calculate and see if you can get a better rate next month or not. Okay, here's how to invest in SSB. First, you will need to be at least 18 years old. Otherwise, too bad, you have no choice but to ask your parents invest for you. Then you need to apply for a CDP account. Account opening takes about 10 business days to approve, yeah? You can apply for SSB through DBS Paylah or OCBC or UOB, either through ATMs or internet banking. But I suggest that you do not use ATMs, yeah? Later you press long and the guy behind you not happy, yeah? You can apply using either cash or SRS, but not CPF money, yeah? CPF be like, no, we don't do that here. Application period starts from 6 PM on the first business day of the month and closes at 9 PM on the 4th last business day of the month. You can only apply for it from 7 AM to 9 PM from Monday to Saturday, yeah? Okay, let me just quickly show you how to invest in SSB via internet banking. If you are using POSB, go to Invest, Singapore Government Securities, choose SSB. Next, okay, then choose this month's SSB. Choose your nationality, whether you want to pay by cash or SRS, then fill in your CDP account number. As for the amount, let's try 69420. Just kidding, you can only apply a minimum of 500 to 200k in multiples of $500, meaning it can be 500, 1,500, $2,000 and so on. Let's try $500. Choose your account. Take note that there's a $2 fee whenever you apply. Once everything is okay, click next, check everything is alright, then submit. You will find out the result on the 3rd last business day after 3 PM. Otherwise, you can also log in at My Savings Bonds portal to check your SSB holdings. Next, if you are using UOB, it's also super easy. On the left side, go to Investment, click IPO, Bonds, T-bills. Then under Singapore Savings Bond, click Transact. Similarly, just fill in your info here. Finally, for OCBC, go to Investments and Insurance, click Singapore Government Securities, go to SSB, click Buy, then fill in your stuff here. So that's how to buy SSB. Now, obviously, we all know that investing in SSB will make you what big. But compared to earning a set 1% interest in the bank, SSB pays you a much higher interest, which you can then use to buy an extra 1 plate of chai fan every year. And best of all, it's risk-free. Now, it's true that Endowus Cash Smart gives you up to 3% interest, but it's still possible to get negative returns in some months. So if you want to earn high interest without any risk, SSB is a good way to do that. The only downside is that you have to wait up to 1 month to get back your money. That means if you have money that you need in the short term, like maybe the next 1 to 5 years, but don't need it in the next 1 month, then you can put it in SSB. Maybe you are saving for a holiday or a house or even some of your emergency funds. Then you can consider putting in SSB to earn a risk-free return of 2.8%. Anyway, that's all for this video. Hopefully, it helps you out. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.